Hi guys, welcome back. Today we'll be taking a look at the Hong Kong market as well as some of the stocks listed in the US. Before we begin, remember take a second to give the video a like and subscribe to stay updated with the market. Do note that I do not provide any buy or sell calls, but focus on the potential traps laid out by the market makers. Without further ado, let's start off with the Hang Seng Index. So you can see that the Hang Seng Index found some support at its last crucial 23.6% at 19,247, and essentially is this last support here, starting from a low of 18.2k to a high of 22.5k. So looking at its last support is not a good sign, because if the stock were to fall to its last support, or rather the index were to fall to the last support, it shows that there actually not much buying power, and it's a lot of selling pressure all the way towards its last support level. So we may be likely heading towards this 18,200 once again if the sentiments were not to improve or the CCP does not quickly step in. So let's take a look at some of its resistance upcoming. So you can first look at it hit a low of 19,178 just below this 19.2 psychological support here, and thereafter it bonded and finished the week just below this 19.9k. To be precise, it was 19,898. So it's still below this 20,000 psychological resistance. Moving up the line, you can see that we just closed above this 23.6, above 19.6k, but we closed below this 19.9k, 19.986. So on the way up, this will all act as a resistance for the Hang Seng Index. Not forgetting, we also have this blue line here and also this red baseline. So this will also act as a very strong resistance on the way up for the Hang Seng Index. So currently, this blue conversion line is 2235, happen to coincide with this 50% Fibonacci retracement, and also this red baseline, which happens to be at 2851, alongside with this 78.6% resistance. So the upcoming resistance to watch for the Hang Seng Index will be 19.986, 20. 235, 20, 44, and also 2839. If we are able to pass through all these four resistance with good volume, then it's likely for us to retest back the high of 21,291. So let's move on to the Hang Seng PEC Index. So looking at the Hang Seng PEC Index is quite similar to the Hang Seng Index. On the other hand, it comprises of all tech stocks. Looking at it similarly, at the 23.6%, it found some support here once and twice. So you can see that the just below this 3,800, the low of 37.55, we found some support here for the Hang Seng PEC Index, which is still very bearish. You can see that we in fact tested the lows of 23.6%, and it's likely for us to be heading towards this 3463 if sentiments would not improve. So on the second day of the week, you can see that Hang Seng PEC Index touched this blue conversion line here, which was sitting around 4135. So on the way up, this blue conversion line and this red baseline will act as a resistance. We hit this resistance, we pull back, and then we continue outwards and close the Friday at 40.38. So looking at the Fibonacci resistance, we can see that on upcoming resistance will be 38.2% at 40.46, 50% at 4135, 61.8% at 4225, and also heading towards this 435.312. And lastly, if we are able to break up all these four resistance, it's likely for us to be heading towards this 4515 to retest the lows, the highs of this high once again. But never to forget that we are still on a downtrend. You can clearly see that this is a form of lower high here. This is the high. This is a lower high. This is also a lower high. Will we create another lower high here? It's hard to say, and we shall find out soon. So long as we do not start creating a trend like this, where we create higher lows and also higher lows, higher highs and higher highs, then it's unlikely for us to see a trend reversal soon. And it's likely for us to continue remain bearish and perhaps test back this 3463.44 for the Hang Seng PEC Index. So let's move on towards some of the stocks. First stock we'll be looking at Baba. So this is listed in US, BABA. So we started the week bearish, and we ended the week quite on a high note, around 87.99, just below this $88 psychological resistance rather. So let's take a look at what exactly happened for the week. So in my last video, I did mention that there might be some stock hunting just below this support level. This low was around 81.80, and you can see that there was a gap here that needs to be closed of a high of 80.14. So 80.14 to a high of 81.80, there was a gap to be closed, and this gap was created from 15th of March to 16th of March, where we jumped from a low of around 80s to a high of around 87. So there's this 80 to 87 gap that was closed, and we in fact closed it just exactly on Thursday. In fact, you can see that there's this candle. So stock hunting is very, very common, where we actually broke down the previous support here. Once the previous support has broken down, it's likely for many investors, retail investors, to put their stock losses just below this support here. So once it gets triggered, then the next day it'll tend to fly up. So this is a very common situation where most of the retail investors start to panic when this previous support starts breaking down. But that said, it's likely for us to be revisiting this $3 because we are still on a downtrend. We are creating a lower highs here compared to this high, and also a lower high here, and also a lower low here. So this is a sign of a downtrend. So let's move on to some of the resistance to watch out for Baba, the one listed in US. So you can clearly see that this 38.2% was reached, and we managed to clear it. In fact, we closed at around 87.99. So the next resistance we'll be watching will be 50% at 90.77, 61.8% at 93.78, and also the 78.6 at 98.06. If we are able to cross all these three resistance, then we're likely to be heading back to this 103.52, and we will test back this high of 103.52, which actually occurred on the 29th of April, on the last day of last few days of April rather. Looking at this, there is also this blue conversion line, and so this red conversion line to watch out for. So this will be likely a key resistance for Baba. You can clearly see that on the way up, there was this red line here. This red baseline acted as a very strong resistance for Alibaba. So the question is, will we go through these two resistance? If we are able to go through these two resistance, then it's likely for us to be heading towards $95 and even $98 to claim back this 8.6% resistance. If not, then we're likely to continue to trend downwards. Key resistance to watch will be 93.78. This is a very key resistance to watch, because if we are able to go up to this, then it's likely for us to be heading towards 98.06 and even breaking up this above this $100 psychological support. But once again, you can see that the trend is still down. So will we create a new low? Will we create a new high? It's unlikely for us. You can see that clearly there's some resistance here. So the stock is currently trading like this. If we are able to break out, that'll be a good. If we are not able to break out, then it's likely for us to be hitting lower to perhaps test this low of 73.28. So let's move on to the one listed in Hong Kong. So this is 9988. So a very similar situation where the previous support get broken down. So previous support broke down, and then thereafter, there's a chance that Monday will likely to gap up, perhaps towards 89.05. It is 30.2%, similar to the one at Baba. But not forgetting, when we gap up, there will be a gap created. Hong Kong led the rally, so there was no gap created here. There was a gap that was being closed here, and if we were to gap up on Monday, then do bear in mind that there will be a gap here. Resistance to watch for 998 will be 30.2% at 89.05. 91.85, 94.65, 98.70, and if you're able to go through all these four resistance, then likely for us to be seeing this 103.80 once again. Looking at the blue conversion line and the red baseline, these two will act as a strong resistance. You can see that there's a resistance here at this red baseline, so it's likely to act as the same resistance. Currently, the blue conversion line is at 91.85, and the red baseline is at 97.25. Let's move on to Tencent, one of the tech giants in Hong Kong. So let's first start off with Tencent, the one listed in New York. So you can see that clearly this 23.6% is the last critical support for Tencent. And we hit a low of around these levels, around $41, and also create a low of 41.50 here. Thereafter, we trend back up, and we actually surpassed this blue and red conversion line. You can see that this two was smashed directly through, and we hit this 61.8% at 45.93. We closed just above it at 45.94. So it's 1 cent above the key resistance, 61.8%. Will we continue to remain bullish? Unless you're able to cross 47.14, then we're likely to test this 48.67. Perhaps on Monday or even Tuesday. But on the way up, don't forget that there is cloud resistance to watch out for. So what exactly is a cloud resistance? So on the way up, you can see that there's this very thick clouds that is on the way. So clearly back then, this cloud acted as a resistance for Tencent. So will we create a resistance once again? I would say there is a high chance that we'll see some resistance when we're approaching the clouds, and the cloud is also relatively thick. So do expect some resistance from a low of about 46 all the way to a high of $50. So do expect some resistance for here. Secondly, one more thing is that the volume across all Chinese stocks, you can look at Alibaba or any other Tencent, you can see that the volume here isn't very, very big. So could it be just be a dead cat bounce or a relief rally? Probably, unless we see some more volume coming in. If we are able to get some huge volume that actually occurred something like these 2 days, then that would be preferred rather than having such a small, low volume here. Let's move on to the Tencent listed in Hong Kong. So the ticker is 700. Looking at the resistance, very similar situation. It's likely for us to gap up perhaps to 365. On Monday or Tuesday, we're likely to hit 365 after clearing this 359 resistance. You can see that on the Friday, we closed just below this red conversion line, this blue baseline at around 359, 358. We closed just below it around 354. So that is acting as a resistance for Tencent currently. Moving on to the resistance to watch out for. After this 61.8% is being cleared at 365, we'll be likely heading towards 375.6. So to test this 8.6% thereafter, if possible, we're likely to see back this 388 high once again. Not forgetting, this cloud is acting as a very strong resistance for Tencent, the one listed in Hong Kong. So do expect some resistance when we are on the way towards 370 to around 390 zone. Next stock, let's move on to JD.com. So JD.com, the one listed in New York. So very similar situation. You can see that this 23.6% for 14 was broken down, but we managed to close above it. So that is a sign of that perhaps a stock hunting. So when a stock were to go down, but still manage to finish the day with a high, you create a candle, something like this, then it means it's likely for retail investors to panic sold here, or even a stop loss get triggered here. And the very next day, you can see that we did have a somewhat like a follow-through buying. But the volume, once again, is not very impressive. So could it be just a dead cat bounce? Probably. Looking at the resistance, there's still many resistance for JD.com. 51.19 was being crossed. So next up, the 8.2% at 53.88, 56.06, 58.24, and 61.34. The high will be 65.29 to watch out for. Let's take a look at the blue conversion line and the red baseline. Look at it, it's 55.40 and 56.06. So do expect some resistance for JD. If we were to hit 55.56, there will be some struggles along the way. So let's go on to the one listed at Hong Kong. So the ticker is 9618. So a very similar situation. You can see that it hit the last support here at 23.6, 189.8. So it's considered quite weak. Likely for us to be heading back to this 160.1 very soon. So let's take a look at some of the resistance to watch. We'll be looking at this 212.2 on Monday, 30.2%, 226, 237, 249, and 265 before we test the high of 286. Looking at the blue and red baseline is currently at 237.7, coincides with this 50% Fibonacci support level. So this resistance is a very strong one. Do expect some struggles for JD.com 9618 along here on when Hong Kong market were to open. So let's move on to Baidu. BIDU, the one listed at New York. So Baidu is slightly weaker. Clearly, you can see that this 23.6% is obviously broken, and we actually had a double bottom here. So double bottom, you can expect some strong reversal up. So you can see that after this double bottom, we are likely to be heading towards some of the resistance. We clearly 30.2% on Friday. So we will likely to be seeing some resistance at 119, 123, 129, and even test a high of 136 here. Looking at this, you can clearly see that this blue conversion line is really acting as a resistance for Baidu at 117. We closed a high of 116.94 just below this conversion line at 117. And looking at this rate, the baseline is at 120.6. So do expect some resistance from Baidu at these two particular levels here. Moving on, let's move on to Baidu, the one listed at Hong Kong. So this is 9888, slightly different from 9988 of Alibaba. So you can see that we managed to close at this 23.6 at 111. So the next resistance to be watching is 115, 118, 122, 126, or 127 rather. Thereafter hitting the high of 133, which actually occurred somewhere on 29th of April. Not forgetting, blue conversion line is at 118.7, and this rate baseline is at 125.5. So do bear in mind that resistance that will be coming in for Baidu will be somewhere between 50% and 61.8% here. If we do not trend up higher, then likely for us to retest the lows here, perhaps creating a new low even. So this low was $99, $100 may be threatened. Let's move on to NIO. NIO created a new low. In fact, let's take a look at the one listed at New York. So this low was 13.01. In fact, we broke down 13.01 two times. So the first day we actually closed at the low of around hit the low of 1264 and closed at 1271. This low was created very deep at 11.67, but we still closed at 1310. So similar situation of stop hunting when we broke down a very key psychological support at $13, hit $12 and even flushed out some retail investors at 11.67. Thereafter we trend back up. However, if we were to continue down, you can clearly see that NIO isn't very looking very healthy. This was the high here, so this is the lower high, low high. This was the low here, lower low, and this was the lower low. So the trend is obviously down. So it's likely for us to continue remaining down. My personal target for NIO, I'm sure many investors will not like it, but personally I'm heading for NIO at around $8 to $9 for NIO, which is I'm not saying that it will fall in a straight line. Stocks don't fall in a straight line. You're likely to create some wave patterns first before we go back towards this $10 psychological support, even breaking it towards $8 or $9. So resistance to watch for NIO. You can see that we clearly studied 0.2% at 14.17. So it's likely for us to be heading towards the next resistance to be $15 psychological support, 15.72, 16.82, and lastly that's a high of 18.22. Let's take a look at some of its conversion line. So 14.94, and this rate baseline it's at 16.68. Clearly you can see that NIO was struggling to actually cross this blue conversion line. So will we struggle at around $15? We will find out next week. Let's move on and take a look at the NIO listed at Hong Kong. So this is a newly listed stock. Ticker is 9866. So clearly, you can see that it actually formed a double bottom. So, or rather, it broke down its bottom. So it broke down its bottom, some panic selling, and the next day it reversed back up. So supposed to be resistance rather to be watching. It's this one we will definitely likely to gap up. So we'll be heading towards 118. Next resistance 124, 130, 138, and also this high of 148. Let's take a look at the blue conversion line. It's currently holding a 124.3, and this rate baseline is at 148.4. So you can see that these two will be a struggle for NIO. Clearly, you can see that this blue line acts as a very strong resistance for NIO. So it is likely for us to see some struggles around this 124 before seeing an even greater resistance to face at 130 levels. So let's move on to KWEB or KWEB or crane shares. So this ETF has been trending down quite a bit, but surprisingly, it actually did not touch its 33.6% yet. It actually missed it by about 30-40 cents. See that the low was 23.72. So the high was around 29.63. Currently, it's just below this blue and red conversion line. You can see that this blue and red is around $26, and we managed to close it about 26.62, around these resistance levels. So 50% will be the likely next resistance to watch. Will be 26.67, 37.37, and 28.37 before retesting the high of 29.63. Looking at this particular ETF, you can see that this was a high here, lower high, lower low, lower low. This was low here. Will we be creating a lower high? It's really hard to tell, but the pattern will likely remain. So it's likely for us to creating lower lows, lower highs. And we may be looking towards this 2041 if the market sentiments will not improve. Key resistance to watch will be 27.37 and 28.37. If we were able to cross these two, then it's likely for us to be perhaps creating a new high after breaking this 29.63 at around these levels here. Next up, let's take a look at CWEB. So CWEB, it looks a lot more bearish. Not exactly sure why, but this 4.65 at 23.6%, you can see that it was obviously broken down, even went as low as near the $4 psychological support level. We found some support at 4.4 on this particular day here, just 2 days before yesterday, rather on Thursday. So looking at some of the resistance to watch for CWEB, you can see that we actually closed just above this 38.2% at 493, above this $5 psychological support. So the next resistance to watch will be 521, 548, 587, before retesting the high of 637. Looking at the blue and red baseline, which is coming up very soon, 520 and 534. So do expect some struggles here. You can clearly see that CWEB will find some struggles at this red baseline here. So it's likely for us to be looking at some struggles just above these 530 levels. So finally, let's move on to FXI. So this is a China large cap ETF. So a very similar situation. We found some support at this last support, 3.6%, 2808. We actually broke down for a few days, and thereafter we climb back up, just breaking down just below this $28 psychological support, 2783. So the high was 3179. Let's take a look at some of the particular resistance to watch. So we managed to clear 38.2% at 29.34. So the next resistance to be watching is 29.81, 30.28, and $31 before going back off 31.80. Looking at the blue and red conversion line, the blue line is currently at 29.76 and the red line is 30.24. So this $30 psychological resistance would be a great one for FXI. Will we be creating a breakout above this $30, or will we just have a fake out and thereafter sell back down above this $30? So we will find out very soon. Looking at it, there's also a cloud resistance here at around $31 to around $32. So do bear in mind that we may intend to see some struggles along the way. If 27.83 were to break down, then unfortunately we may be looking towards this 26.13. So that's all, and if there's any changes, I'll give you guys an update. Thanks for stopping by, and don't forget to subscribe as you'll keep the uptrend of the channel intact. Till we meet again, appreciate the manipulation.